Good afternoon, everyone, and welcome back to the Week in Markets. It's our chance to review the week that was for both equities and bonds. This week we want to focus in on the UK because we've had some interesting data which presents the UK economy in much the same light as last month. It's very much as you were. But before we get to that, I'm delighted to be joined by George Bell, investment manager here at True Potential Investments. We're going to discuss equity markets first of all. It's been rather weak so far, driven by some particular issues which aren't to do with data, which has evolved over the week. So George, could you perhaps characterise what has been driving equity markets this week?
Yeah, I mean, we've had a lot of data, but it doesn't seem to be driving the weakness which we've seen. It seems a lot more concentrated within specific areas. Mainly technology is where we've seen the weakness, and more of that coming through there today in the markets. But, I mean, what are the sort of key aspects we've been drawn out there?
Well, I think it always demonstrates the power of the unexpected headline from the White House. We were used to it when Donald Trump was in the White House. We've been less accustomed to it since Joe Biden became president, and it's really just this idea that Joe Biden's administration are exploring possible restrictions on the export of chips to China, and these chips are vital for building semiconductors. Mm-hmm. So it's this idea of a sort of soft trade war again. And it was just a headline, just a rumour, but it has had quite a severe impact. As I made the case in morning markets earlier in the week, names such as AMSL, who manufacture these chips, down over 13% on just a single headline, and that has dragged these tech indices, as you say, much lower. But we have seen some indices outperform, such as the Dow Jones. And I think it's really just a small issue. It's not really an economic issue at all. Mm-hmm. It's a political issue, isn't it?
Yeah, interesting time in the week of the China Third Plenum meeting, yes, where they were talking about the need for innovation, the need to put China first and front and centre of everything in which they do, which part and parcels innovation around technology and infrastructure as well. And
also, of course, it was ahead of Donald Trump's, effectively his speech at the Republican National Convention, where again he was hawkish on China trade tensions. Mm-hmm. So perhaps the White House trying to furnish their credentials as being trade hawks just in this election cycle. So that's the setting for equities, George. We did promise we would focus on the UK. Before we get into the data releases, how would you characterise the UK economy
How would
today?
You characterise the UK economy? It is growing, but only just, really. Yep. The rate at which it's growing is in fact slowing down. So what do we mean by that? In the first quarter, the UK economy grew by 0.7%. So the IMF is expecting a relatively weak outcome. They're expecting around 0.5% growth for the full year. Compare that to the US, they're expecting around 2.7% there. So on the international stage, especially in developed markets, the UK is running at a fairly slow rate. The service economy is really important to the UK. We are a service-led economy, and that's where the strength has been, which has been withholding data in a positive place. Areas like research, legal, professional fees have been in demand. Effectively, construction and manufacturing has been relatively weaker, and it's the demand for services which has actually kept core inflation above the target which the central bank want to run. So service inflation's running at around 3 times the current target which we're seeing. So we've got a situation of positive growth but relatively weak, and we've got core inflation which is above the target in which the Bank of England want to see effectively.
And of course the UK typically imports a lot of inflation from the rest of the world. We also tend to have stickier inflation mm-hmm. than the United States or Europe, for example. To give you a context, we were probably the only economy pre-COVID which had inflation consistently close to target. We averaged 2%. But you did mention the inflation data this week. What would be, and you mentioned the strength of services, mm-hmm. was there anything else in the data that took your interest which perhaps matters for the Bank of England?
We're still seeing wages which are growing faster than the rate of inflation, so the fact that consumers have got money in their pocket and an ability to get out there and spend is part and parcel of the challenge we've got on inflation, and also what it means for businesses and their requirement to try and pass some of these costs on to their consumers from their own wage bills is an issue to consider as well. We've got the Bank of England who will be meeting in August. I think at this point in time the market is probably leaning more to an expectation that the rate cut will come in September, but we'll see what happens over the next couple of weeks in terms of the data. We had UK retail sales data out there this morning.
Well, that's an interesting point, because you did say the UK consumers' ability to spend, but what today's retail sales is telling us is they're not spending. So it's not just that we saw a unexpected contraction in retail sales for the month of June, which was perhaps even more of a surprise because it, of course, involved some of the football tournament, and typically retail sales do get a boost from that. It's not just that consumers are spending less in aggregate, they're actually buying fewer goods as well. So it's this, the cost of living crisis is clearly causing the UK household to actually increase savings rather than even keep spending consistent. And we're actually, retail sales as an aggregate measure today are less than they were pre-COVID. So we've got a very cautious UK consumer.
Yeah, because a lot of headlines blamed it on the weather, but of course it wasn't just high street spending which was down, it was online as well.
Yeah, so I think the cost of living crisis, it's very much a theme for the UK, and what we're seeing is increase in savings, and it appears some of the households actually are waiting perhaps for an interest rate cut from the Bank of England just to help them refinance their mortgages. So, I mean, my takeaway from the inflation data is that there's still a lot of work to do for the UK, but patience is required. We've got headline inflation at 2%, as you said. Core inflation is falling, and I think if you were to take a trend line, you could see it being somewhere far more comfortable for the Bank of England by the end of the year. That, of course, requires patience. But also, I guess it all fits in with a sort of global theme of falling inflation. The US is leading the cycle, isn't it? The UK is somewhere towards the end, perhaps 6 to 12 months behind the US. Now, on the employment data, there wasn't a lot exciting in there, but what do you think that tells us about the state of the jobs market in the UK? It's
relatively benign in the sense that we're not seeing a concerning acceleration which would be potentially challenging for inflation, or you're not seeing a material deceleration which would be bad for economic growth. It's sort of somewhere in the middle. So the unemployment rate is 4.4%, so about 1.5 million out of work in the UK at the moment, which isn't too far away from sort of long run lows essentially. So it's in an okay place. We've had some challenges with UK employment data over the last year. The ONS have had to go back to face-to-face interviews to find out who's working and who's not, because they just weren't getting the responses from just using PAYE data. But essentially, when you look at the latest reading, what we're seeing is those who are working full-time is actually moderated by about 25,000, and those who are working part-time is actually increased by about 23,000. So you're seeing a bit of a, under the surface, a bit of a shift there, which ultimately it's, fewer hours worked as a result of that sort of shift to part-time.
Great, thanks, George. So in summary, really, we've got a cooling jobs market in the UK, which again reflects a global cycle of a more normal jobs market. The UK is lagging the global disinflation cycle, but we're getting there, albeit painfully. And we've had an unexpected tech headline this week, which has impacted equity markets. So all in all, there's much to look forward to, I guess, next week from the Fed. We've got the US Federal Reserve will update us all on their monetary policy and perhaps lay the groundwork for an interest rate cut from them in September. So that's all from us this week. Please do like and subscribe to the YouTube channel, and we will update you next week on economic events. Thank you.